What's up everyone, it's Karthik with MoneyVest Real Estate and a very happy new year to all of you, and I hope you had an amazing 2024 and starting 2025 there's going to be a lot of content on real estate. We're going to be talking about Dubai, the United States, Europe, Asia, a lot of different real estate markets. So I'm super excited to start this fresh brand new year with all of you. In this update, I'm going to walk you through my entire process of running an analysis on my rental property that is just about getting ready for handover by Ellington Properties in JVC. As I've mentioned this before in my previous updates, I've been walking you guys through the entire process, the entire journey. I've been sharing it on this channel. So my neighbor actually sent me a picture of the recent developments of my project, and I'm very excited to share that with you. And I'm going to be going over the entire process of what the returns could look like for this investment property. So hope you all enjoy this video and find it helpful. Make sure that you drop a like and subscribe to the channel if you haven't already. We're almost approaching 2,000 subscribers. So thank you so much, and I really do appreciate your support. So this right here was the picture that my friend sent me over, and this is their development over in JVC by Ellington Properties. It is a mid-rise, and so they're moving very fast. In fact, so much so that the last time I was in Dubai, the only thing that I was able to see was the structure, right? None of the actual exterior designs. And it's very good to see that they are finally putting it all together, and they're up like 97%. They're already completed as per the RERA website. And so the original handover date was March 2025. And so what I've been talking around, to a lot of agents and investors and people who've bought the units, they're talking about an early handover. So it could get handed over as early as, in February or basically early March. So that gives me the opportunity to get into the unit, kind of furnish the place, or put it on rent, right? Almost immediately. So I'm going to walk you through exactly the entire process of what that's going to look like. It is a one bedroom. For those of you who need a refresher, go back, watch my previous videos. It is a one bedroom, almost 800 square feet. Got a pretty good deal on it. It's already appreciated quite a bit. Right now, the market value's sitting roughly around 1.25 million dirhams. And of course, as you know, that I bought it for under 900,000. So that's exactly what we're going to be doing the analysis, the rental yield, what that's going to look like for me personally. And I'm actually going to walk you through the entire process with the spreadsheet. By the way, if you want to get access to the spreadsheet, link's going to be down below. You can actually purchase this real estate model, the exact model that I'm using to underwrite all these deals and really better help me understand whether the numbers actually make sense from an investment standpoint or not, because there's a lot of agents out there that will try to sell you off-plan properties. But if you are looking for passive income and cash flow, this right here is the analysis that you really want to do. You want to put down all the numbers on paper. You want to understand all the costs associated with the deal, and then you'll be able to better understand your net cash on cash return, as well as your cap rates, as well as whether it's a good investment or not. So link's going to be down below if you want to download this spreadsheet and buy it for 20 bucks. I believe it's going to be super helpful because it's going to help you really put down a lot of these numbers, together to better understand and make a decision for yourself. So let's just dive right into it. This right here is, as of the RERA website, about almost 96% completed. So very excited to see that. And actually, if you come over to the RERA website, so this right here is the entire project. I don't know why, but the latest inspection pictures, they're never clear. They're like super blurry. But this right here is the mid-rise building. You can see again a little bit of the exterior. Now I have a villa view, or basically a community view. I don't have the interior or the pool view, which I kind of like because you see this big high rise right next to the building. And so if you have an interior or the pool view, you're actually going to be looking into, as I'm going to show you here. So this again is the inside, the corridors, and this is the actual pool view. So of course they've put a little bit of this wall right here, but beyond this wall is the high-rise building, right? So it's the high-rise building that's going to be right there. And so for me, I'm not really super keen on seeing, of course, the pool and the high-rise. I would much rather have the outside view, which is looking into the villas or the communities that are nearby. So that again is a little bit of the updates again. So doing over this is the bathroom from the unit, and those are all the pictures that were shared on the Dubai Land Department website. So going over to the spreadsheet itself. So this right here are all the specs. As you guys know, just under 800 square feet. The service charges, I'm assuming are going to be somewhere around 20 to 25 dirhams per square feet. And that's been pretty standard across the board for Ellington properties. I mean, if you come over to Belgravia Heights, that's also a Ellington project over in JVC, you'll notice the service charges were 20 dirhams per square feet. General fund about 1949, and reserve fund about about 1.29 dirhams, and that's about 20.78 dirhams per square feet. So I'm actually assuming around 25. I might be a little bit on the higher end, but like I said, in all of my analysis, you will see me, basically underwrite deals with the most conservative expectations, right? Conservative meaning what is, likely to be the most realistic scenario. I'm never making decisions on the best case scenario or the most optimistic scenario, but I'm actually making my decisions and assumptions on the realistic and somewhat base case expectations. If I get the best, that's great. That's the icing on the cake, but that's not what I'm going to be using to make decisions. So hope that makes sense. I'm going to be very conservative in my analysis, and if I get the higher numbers, that's all well and good, right? So that's the icing on the cake. So 799 square feet, 25 dirhams per square feet, that comes out to around 1,600 in-service charges per month, which of course is going to go straight to Ellington Properties, management company, which is going to take care of all the common areas, the amenities, as well as if there's any issues inside the unit, they need something to be fixed, the tenants or whatever, that's going to take care of that service charges. HOI, homeowners insurance, very important. I've been talking to a lot of insurance companies and, been getting quotes somewhere around 80 to 120, 150 dirhams per month for homeowners insurance. So I think it's a safe assumption to make that 100 dirhams is going to pretty much cover that. If it's slightly higher or lower, I'm going to adjust that once I finally have the policy on hand. But that's the assumption that I'm making. Now, when it comes to variable expenses, utilities, cleaning, and hospitality. I've put in cleaning and hospitality because if I ever plan on doing Airbnbs in Dubai, there's a separate license I need to get for that. But if I want to do that, I want to budget that in my spreadsheet. So this is a little bit of an updated version of the spreadsheet that's available. I'm going to update this and you can get that and download it from the website. I'm going to put the link down below. But cleaning, hospitality, I'm already accounting for it if I ever need to, if I'm planning on putting it on Airbnb or long-term leases, depending on what rate of return I can get based on both of those analyses. Now, utilities, of course, the tenant takes care of all the utilities in Dubai. Like I'm also renting my own place and I take care of all the utilities, including Wi-Fi, AC, we got water, electricity, everything I pay for myself. And so tenant takes care of that. So again, I don't have to worry about it as a landlord. Now, this right here is the expense budgets. Now, before I dive into this, I really want to help you understand why we create these, because most investors in Dubai, they don't account for it. So if I remove for all of this, all of a sudden you'll notice that my only expenses on a monthly basis is the service charges that I pay to the developer or the management company in this case, and the homeowner's insurance, right? Those are the two main expenses that I have to pay for, and that comes out to around 1765. But the reason why I keep these expense budgets is because in your real estate investing career, however long it is, 10, 20, 30, 40, 50 years, you're bound to have problems. And this right here is problem management. This right here is managing the property well over the life of the property. Yes, this is a brand new building, brand new unit. The chances of something going wrong over the next 2 to 3 years is really, really low. But I'd rather be prepared than be sorry later. That's the philosophy that I like to employ with almost all of my analysis, is to be prepared for if something goes wrong. And to be honest, it's not if something goes wrong, it's when something goes wrong, because eventually something will, right? So if your plan is to buy a lot of properties and to invest in real estate, over the long term, and you've got, let's say 10, 12, 15 different units, in many circumstances, there's going to be something going wrong with some of those properties in a given year. Need a new roof, need a new AC, need a new plumbing, need new electricity, need some wiring issues, air leak, water leak, need new toilets, need new kitchens, something, right? New furniture, the new bed, tiling, the kitchen, or you want to redo the bathroom. Something is always going to happen. So you have to account for these. And so the way I've kind of structured this, I've got a big 10% capital expenditure budget. I've got the repairs and maintenance, which I count 5%, which are your smaller expenses. So think of capital expenditures, some of the bigger items. If you want to redo the kitchen, if you want to redo the bathroom, or you want to redo the entire furniture or the tiling, some of the bigger expenses, right? And in some circumstances, if you're buying villas, if you're buying independent houses, you want to redo the roof, right? That's a big expense. So that comes under capital expenditures, 10% of the monthly rent. You save it. Repairs and maintenance, 5%. Some of the smaller items, smaller expenses that you may wanna indulge on if you want to repair something, smaller items. Then you've got 10% property management. Now, this number right here, which is 10% of the rent, what I've learned is that in Dubai, it doesn't really matter because, the agent rents the apartment for you. They collect all the checks from the tenant and they give you all the checks. You cash those checks depending on the frequency and the timeline. And then the agent works with the tenant if there is a problem. And then, of course, there's the management company, right? That you're already paying service charges to. So remember, this right here, you're paying the service charges to the management company. They take care of a lot of the common areas and the problems within the unit that need to be fixed. Now, in very rare circumstances, the tenant's going to be calling the agent about a problem, or the agent's going to be calling you about a problem that needs to be fixed. But in many circumstances, those will be handled by the service charges, by the management company that's collecting the service charges from you. So you can probably remove this. I was talking to my friend the other day. I was like, should I really be accounting for 10% of the property management, or should I just let it go? Of course, if you're running an Airbnb, property management is certainly going to be there 10, 20%, because there's going to be more frequency of guests coming in and out of those properties, and there's going to be more cleaning and more management involved. But if you are long-term leases, long-term tenants, then the property management really shouldn't be there. But still, I'm being conservative, putting in 10% there. We got the vacancy. If for whatever reason the property is vacant for a month or two, doesn't rent, immediately, you got to account for 5% for that. Now, I've also got refinancing cost of 2.5%. And that simply means that right now I'm already paying cash for this property, right? I've already paid cash. There's no loans, there's no mortgages on this property. So eventually, if I want to pull equity out, if I want to do an equity release or a cash out refinance where I'm pulling 60 or 70 or 80% of the market value, I've got to pay some closing cost, right? I've got to pay some fees to the bank to facilitate with that equity release. And so for that, I also account for 2.5% per month for the rent. So 2.5% of the rent I'm putting aside for the refinancing cost. And so I always do that, even if I have a mortgage, because in Dubai, you get like a 3-year teaser rate. You get like a 4.65, 4.5% rate for the first 3 years. And then post 3 years, you get, almost 2% or 1.5% over the EIBOR rate. And that's roughly going to be about 3 to 4%. So you're looking to pay like 6.5, upwards of 7% after the 3 years. So if you want to refinance post 3 years and get locked into another 4.5% rate, you're going to be paying some refinancing cost. And there's also prepayment penalties involved with that. So all of that is going to be into this bucket where I'm already saving for that, for 2 years or 3 years. And I don't have to worry about when I do want to do like a cash out refinance or I want to do an equity release. Finally, we got 10% cash reserves for whatever reasons. If something goes wrong, something happens, you want to have at least some cash reserves sitting on the sidelines. So all in all, this is going to be 10, 5, 10, 5, 2.5, and 10. So you've got like about 42.5% of the rent, of the gross rent going towards these expense budgets that you're saving. So each month, and we haven't even talked about the rents. I'm going to go over that in just a minute. But each month I'm saving 42.5% of the rent and putting it aside into these 6 buckets. Now, this may seem very aggressive, but it's a very, very plug and play approach. You can decide if you don't want to save for property management, remove it. If you don't want to save for vacancy, remove it. If you don't want to save for this refinancing cost or these cash reserves, remove it. If you don't feel like repairs and maintenance is important, remove it. It's really up to you. I'm just sharing my approach and I'm being very conservative, but you do you. It's your approach, it's your model. That's why you can download the spreadsheet and plug in your numbers, whatever you want to plug in. You want to save for these, not save for these. You take the spreadsheet and do whatever you want with it, right? You can go higher. You can increase these numbers to like 20% or 30%. That's the whole point, right? You can run the analysis the way you want. And every property is going to be different. Every project is going to be different. Every rental investment unit is going to be different. Now, let's talk a little bit about the rent so I can finally kind of bring it home and show you guys what I'm expecting from this property. So I spoke with a lot of lenders, actually a lot of agents, excuse me. I spoke with a lot of agents, a lot of brokers in Dubai to try to get an idea of what this property would rent for. So if you come over to the analysis that I've been doing, so I've got two different websites that I want to show you. First of all, of course, is the DXB Interact. You've got Jumeirah Village Circle. I've put in rentals for 1 bedrooms last month. The average rent has been 70,000 dirhams per year. The renewed rentals have been around 55,000. If you go over the last 3 months, it's a little bit lower, I think. Yep, significantly lower. Renewed rentals are 53,000 and new rentals are still at 70,000. Last month, as I already showed you, 70,000 for new rentals and 55,000 for average. Last week, it is 68,000 for average, 1 bedroom. We're talking 1 bedroom rental units in JVC, and renewed are 54,800. Now, what's interesting is that this is not the case for Ellington properties. And that's why I talk so highly of the quality developers in the UAE, because if you're getting a quality developer, you can expect a higher market rent. You can expect, above average market rent. And let me show you. If you come over to Belgravia, right? So remember these numbers, we're talking 50 to 70,000 per year for 1 bedroom apartments in JVC. Now let's come over to Belgravia, which is one of the more popular buildings in JVC by Ellington. Let's go over to Belgravia 2 and you select that. And now you've got average rent for new rentals at 95,000, right? You got 63,000 for renewed rentals and 95,000 for new rentals. Let's just look at a few more. So Belgravia is, again, there's Belgravia Square. If you click on that one, and now you're looking at renewed rentals at 95,000 and new rentals at 90,500. Let me just look at a few more. There's a few more Belgravia apartments. Let's do Belgravia in Jumeirah Village Circle. That's Belgravia 1. And now you've got new rentals at 92.5 and renewed rentals also at 92.5 as of last month. 3 months on average has been around 87 to 89,000, and last week has been around 95,000. So you get the idea. And then if you come over to another website that I wanted to show you, which is this right here, Property Search, and you come over to JVC, 1 bedroom, and I've actually selected Ellington properties and what is available for rent. And you'll notice a lot of them, Belgravia 2, 91,000, Belgravia Square, 110,000. That is actually closer to my spec here because I've also got a 1 bedroom, 2 bathroom. It's like 1 bedroom and 1.5 bathrooms. So 1 powder room and then 1 full bathroom. About 800 square feet. This one's at 815. This one doesn't have an extra bathroom, so maybe that's a little bit less, but a bigger square footage, 930 square feet. You got 830 square feet, 90,000. 773 square feet, 90,000, 90,000, 90,000, 110,000, 90,000, 100,000. So these are all JVC, but Ellington properties. So they're obviously demanding a higher rental. And that's what we're going to do. And I've actually spoken to a lot of agents and they said it can rent somewhere between 80 to 100,000. So I'm going with 7,500 per month, which comes out to 90,000. So if you multiply this number by 12, you're looking at 90,000, right? 90,000 dirhams per year. So 7,500 per month. This is my service charges. This is my HOI. This is my expense budgets. And so my total expenses come out to just under 5,000 dirhams. Monthly net cash flow that I can take home at 2,500 dirhams. And so these are the final numbers, which in dollar terms is just under $700. Annually, a little bit over $8,331. However, the net cash on cash and cap rate significantly lower at 2.5% and 3.67%. However, I also want to show you what happens after year 2, after I am done saving for these items, because I'm not saving for this forever. I'm only going to be saving for these items for 2 years, which is 24 months. So once I'm done with, let's say, capital expenditures, I remove repairs and maintenance, no more property management, no more vacancies, no more refinancing costs, and no more cash reserves, my monthly net cash flow jumps to almost 5,800 dirhams. And now I've got a cap rate of over 6%, net cash on cash at almost 5.6, almost 6%, and an annual net cash flow of about 68,000 dirhams or a little bit over 18,000 US dollars. And this is after my expense budget's already providing me with a safe balance of, let's just do this math here. I'm going to sum up this entire column, and then I'm going to multiply it by 24. That is after me already having 76,000 dirhams in the bank for these 6 items that I can use the money for. And then I'm, of course, able to generate almost a 6% net cash on cash, or a little bit over 6% cap rate. So that right there is what I am planning to do with this property. Now, even if I do put it on a mortgage, let's say that I take on 60% mortgage at a 6.25% return, even then, if you take a look, I'll have to eliminate some of these items over here to cash flow each month. So removing for property management, removing for those cash reserves, and then also removing for vacancies. And now I'm pretty much break even. But the good thing is, of course, the tenant is paying down the mortgage for me, and I'm still saving for these capex, repairs and maintenance, and refinancing cost. So if I remove for all of this, then it's about 1,200 dirhams per month in net cash flow, with a cap rate of just over 6%, and of course a net cash on cash of a little bit under 3%, which again is not ideal. It's not the best. However, it's really the equity pay down part, which is significantly more important, because then I can get this money out and invest it into another deal, right? So that's the whole point of cash out refinancing, or basically doing an equity release. So that right there is the entire analysis on my property that is just about getting ready for handover. Hope you all enjoyed it and found it helpful. This right here is a rough guide that I'm really following right now, because this is the price budgets that I'm looking for. I know these are hard to come by. I know these are very, very difficult deals to snag in this market right now, but I'm really looking for 1-bedroom apartments around the 900,000 mark, 900,000 to 1 million dirham mark. 2 bedrooms somewhere around 1.2 to 1.3, and then 3 bedrooms somewhere around 1.4, 1.5 million. And they have to be from a quality developer, right? Ellington, Emar, Nakheel, Meras, like some of these, which again is going to be very, very difficult. But it's possible. It's possible, right? So don't give up on it. There's definitely a lot of possible options out there. There's a lot of deals. There are a lot of distressed and motivated sellers. So be on the lookout. I'm sure there's going to be deals out there in 2025 for us. I'll keep you guys updated with the entire process, and with me going over and renting this apartment. I'll do a quick walkthrough with all of you when I get back to Dubai later this week or next week. And so hope you all enjoy this video. Again, if you want to get access to this entire spreadsheet, link's going to be down below if you're interested in purchasing it. And as always, happy investing. I'll see you all in the next video.